So this is a revaluation account. First part we will be doing revaluation account. So first of all, you have to know what is revaluation account and why it is necessary to have revaluation account. See, with the passage of time, the value of assets and liabilities might have increased or decreased. See, partners have already started their business and they are doing the business for many years. Now with the passage of time, the value of assets and liabilities goes on increasing and decreasing. Whenever a new partner joins, so they get a golden opportunity to revalue these assets and liabilities as per the present valuation. So the new partners should not suffer, neither get benefited because of these changes. Because you see the values have already changed. I have purchased my asset way back, my land, which I have purchased in suppose 5 lakhs. Now its value has become almost 12 lakhs. So if a new partner will join, asset value is shown 5 lakhs. So he may suffer. He will think that the business doesn't have much capital, much assets. So in order to avoid new partner to gain any benefit or to give him any sufferance, before he joins, we revalue the assets and liabilities as per the present valuation. So in the if in the assets and liabilities, hence prior to the admission of a new partner, revaluation account is prepared and the profit or loss on such revaluation is transferred to the old partners only. So this is the first part, that only the old partners will enjoy the profit or loss from the revalued assets and liabilities. Why? Because we do not want to share any losses, neither we want to give any benefit to the new partners. So we revalue assets and liabilities, and whatever profits and losses happens in the revaluation, that is to be shared among the existing partners. Let's see how these assets and liabilities dealt at the time of reconstitution of a firm. Reconstitution of a firm means revaluation. Assets and liabilities can be shown in the balance sheet at the new values. We prepare a revaluation account, or it can be shown in the old values. We can show the assets and liabilities in old values if required in the sum. But for that, we require to prepare memorandum revaluation account, which is not in the syllabus now. But again, we can show in one more way, which I will be teaching you in later part of the chapter. That is called capital adjustment. Just by increasing and decreasing the capital adjustment, we can show. This is just by doing sacrificing and gaining ratio way, we can show the changes in the value of assets and liabilities, which will be affected, the effect will be given to all the partners in that case. So that can be done, but that will be shown later on. That is there in the part of the syllabus. But what is basically to show the changes in increase or decrease in assets or increase or decrease in liabilities, that is mostly shown through one account called revaluation account. Now I'll give you one example. Suppose my asset value has been revalued. Suppose my land value has been revalued from 5 lakhs to 7 lakhs. So my value of land has increased. So I will be writing land account debit because asset has a debit balance. To increase it, we further debit it. But what will I credit? I will credit revaluation.
Revaluation
Yes,
account.
and revaluation has one more name. The revaluation name is also known as profit and loss adjustment account. Actually, we cannot open our, we cannot open our, this one. We cannot open our profit.
Revaluation
No,
account.
we cannot open our profit and loss account because this is done at the end of the year or something like that, or at the beginning of the year. So we cannot open our, this one account, our profit and loss account. So we are preparing in profit and loss adjustment account. So this profit and loss adjustment account is also known as nothing but profit and loss adjustment account is nothing but revaluation account. So profit and loss, actually, whenever you see when we have done the rectification of errors after preparation of final accounts, we used to show it through what? Through profit and loss adjustment account. And that same profit and loss adjustment account is nothing but this same
Revaluation
is
account.
revaluation account. Profit and loss adjustment account.
Hmm.
Adjustment account. Yes. What is revaluation account? See, revaluation account or profit and loss adjustment account is a nominal account and is debited by decrease in the value of assets. Now, what is the meaning of debited? Now, I gave you an example just now that asset value land has increased. So, see, we have credited revaluation, land to
Credited the
revaluation. But if the
hmm.
land value would have decreased or a machinery value would have decreased, revaluation,
Revaluation
see,
to land
revaluation
and
is debited then.
machinery.
In that case, revaluation is debited and
Debited.
is debited by decrease in the value of assets. If it is debited by the decrease in the value of assets, then increase in the value of liability also it will debit. Suppose my
And
creditors
decrease
value
in
have
the
increased. My
hmm.
creditors value, so I have to further credit it. So what I have to debit?
Yes.
I have to debit revaluation.
Hmm.
So liability or decrease in the value of asset or even so what is written over here is debited by decrease in the value of asset and increase in the value of liability, and credited by increase in the value of liability or decrease in the value of assets. Even unrecorded asset or liabilities are recorded in this account. Unrecorded, it's given that a machinery found, a typewriter found which was not recorded in the books. So when we will record it now, it will be typewriter to
Credited.
revaluation. It will be typewriter to
Credited.
revaluation. So
Yes,
you
sir.
see, for unrecorded also we have to show it through revaluation account because it is nothing but profit and loss adjustment account. Why? Because this is a profit coming, but this profit we are showing after the preparation of final accounts. So where we will show in what part of the rectification? In PL adjustment account, and that name in partnership is named as revaluation. That's all. The
Okay.
profit and loss of this account is transferred to the old partners in the old age. So we have understood that revaluation, some debit amount, some credit amount. Whenever our credit amount, because it's a nominal account, whenever our credit
Hmm.
amount, just like trading account also,
Profit.
whenever our
When
credit amount is
credit
more than the debit, we have
profit.
a profit that will be shown among the,
Hmm.
that will be given to the old partners in their old ratio.
Hmm. Gaining ratio.
Yes, in the new,
Sharing ratio.
in their
Profit
old
sharing.
ratio, in their old ratio, OR, old
Hmm.
ratio. That is their
Hmm.
PSR, profit sharing ratio.
Ah,
Okay. Now see, this is the format of revaluation account. We will do journals, but this is a revaluation account. The same journal, we will just do posting, then we will get the same thing. So particulars amount, two liabilities. Whenever any liabilities
increase.
value have increased, so like creditors value have increased, evaluation to liability to creditors. Asset decrease, then to asset. Similarly, when asset increase, by asset. Liability decrease, then by liability. For any unrecorded asset, just now I gave you the example of typewriter. So by typewriter, by unrecorded asset. Over here, to provision, any provision you are creating, like you are creating provision for bad debts. That means debtors value you are reducing. Actually, you should write two debtors, but we generally don't write two debtors. We write two provision for doubtful debts. Any unrecorded liability happens. So for that unrecorded liability, suddenly I got a liability which was a contingent liability has become now pure liability of ours. We have to pay. So that unrecorded contingent liability has to be recorded. So two unrecorded liability, revaluation to liability, liability value has increased. A new liability has formed. So two unrecorded liability. And then we have the balancing figure. Two capital, if it's a credit side is more, then two capital we will get profit to be shared among the old partners in their old ratio. And if our debit side is more, then we have by capital, the loss of our profit and loss adjustment account, that is loss of revaluation account, will be shared when our debit side total will be more. That is just the balancing figure. Even when if they will ask you to do the journal in rough, you have to prepare the revaluation account in order to get these two, this one, either to capital or by capital. That means I to either pass, if there is a loss, our journal entry will become what? Partners capital account debit, old partners capital account debit to revaluation in case of loss. And in case of profit,
Hmm.
it will be revaluation account debit to partners capital account. So this is our revaluation account format.
Sir, profit will be by profit and loss to revaluation, and loss will be profit and revaluation to
In if
profit
it is
and
a
loss.
profit, if it is a profit in revaluation,
Sir,
then the
it is
journal entry is
credited in
revaluation
capital
account.
account.
Yes, yes. Then the journal entry will be revaluation account debit to capital account. To
Yes,
capital
sir.
account.
Profit
A
is
to B.
always
Yes, yes.
credited
Obviously,
and
because the evaluation
loss.
account is a nominal account. Profit is only happening
Yes,
when
sir.
credit total is more. Just like our trading account, just like our profit and loss account.
Yes, sir.
Whenever profit is more, then only the two capital, just like our PL appropriation account. So
Yes, sir.
two capital account. And if a loss, then by capital. So increase in the assets or unrecorded asset, the journal entry is given over here. Asset account debit to revaluation, and decrease in asset revaluation to asset account. Similarly, increase in liability revaluation to liability, and for unrecorded liability also revaluation to liability.
Hmm.
Okay. Decrease in liability, liability to revaluation, and profit on revaluation. Just now we have done revaluation to old partners capital account, loss old partners capital account to revaluation account. This is a journal entry, and these two journal, this any one of them will be there in the sum. Either this will come or this will come, and this will not be given to distribute the losses and profits in the sum. It will not be mentioned. You have to find out the balancing figure of revaluation and you have to do it if they have asked journal only. Now we will be doing this sum and we will make our matter everything clear in this chapter, the revaluation part. See, the sum is given like this. Building is appreciated by 6,000. Now, the first part I should read it. First part I have not written, that A and B are partners. They have shared the
Profit
profits
sharing
among
ratio.
the equal ratio, suppose. And whatever
Okay.
happens, whatever C has been entered into the business and on is entering, these are all adjusted. So, let's see this one. Number one, building appreciated by 6,000. So, what will be the entry then? Building account debit to revaluation account. So our journal entry will become building account debit to revaluation account. Okay.
Hmm.
Amount is 6,000 only. Building to be increased
Yes.
by 6,000. Same entry. Building
Yes, sir.
account debit to revaluation 6,000. Building to be increased to 40,000. Book value
Same
is
value. Same value
same
for
value,
6,000
34,000 given
increment.
over here. Now I have written
Yes, sir.
book value. In the sum you may get its book value in the balance sheet. Okay. In the balance sheet
Hmm.
asset side, it will be written 34,000. Okay.
Yes, sir.
Building to be, yes, building to be brought up to 110% of its book value. See, the language, I have used the same thing with different languages.
6,000 increment.
Yes,
Yes, sir.
obviously, this one will be 6,000 because it's showing over here to be increased to 110%. The book value is 60,000. So 110% will be 66,000. So in the balance sheet, I will show 66,000. 6,000 increase. How much increase? That much we will write in revaluation. Now it's written building is already undervalued by 10% and the book value is 54,000. So already undervalued.
6,000.
So again, you have to make it more value. So this is 90%. 90% is 54,000.
Yes.
100% will be 60,000. So difference is
60,000.
6,000. So this
6,000.
6,000 will be shown in the revaluation account as building to revaluation. In all the cases, I have taken 6,000.
Hmm.
Next, for machinery is valued 40,000 and is depreciated by 10%, means reduced. So
4,000.
4,000. So it will be what? Revaluation to machinery. Similarly,
Yes, sir.
machinery valued 40,000 is to be reduced by 10%. Same meaning,
4,000.
revaluation to machinery 4,000.
Hmm.
Machinery book value is 40,000 and its market value is 36,000. So you have to show in the market value, the minimum of the value,
Hmm.
conservative principle. So it is to be again reduced by 4,000. So to reduce it by 4,000, again revaluation to machinery. Again, machinery was overvalued by 10%. Book value is 44,000. So overvalued already 10%. You will not find out 4,400. It's overvalued by 10% means this value is 110%. So
Hmm.
44,000 is 110%. You have to find out the 100%. That means 44,000
10%.
into
Uh,
44,000 into 100 divide by 110.
by
You will get 40,000.
4,000.
So 44 minus
40,000.
40, that is 4,000 is overvalued.
4,000 difference.
Yes, so 4,000 will be the difference, not 4,400. So it will be shown again as
4,000.
what? It will be shown again
Yeah.
as this one,
Revaluation to machinery.
revaluation to
4,000.
machinery, 4,000. Building to be brought up to 90% of its book value. Book value is 40,000. Building to be brought up to
And
90% of its book value. The book
100%
value
is
is 40,000.
40,000. 90,000 will be 36,000.
So you have to make it 4,000 less. You have to make it for
Yes, sir.
30, 90% of its book value. So 4,000 again less.
36,000.
Then again revaluation to machinery. Okay. So this we
Hmm.
have done.
Yes, sir.
In the first instances, or if you will prepare the revaluation account, if you will prepare a revaluation account, there is what? A profit or a loss? There is a,
Profit of 2,000
yes,
of
profit of
building.
2,000. So that has to
Yes,
be
sir.
recorded in the
Ca-
what? In the capital
Capital
account.
account.
So
Thousand
revaluation
thousand
account,
each partner.
yes, thousand, thousand. If two partners are there, then thousand each partner. We consider it to be a two partners.
Hmm.
Okay. So revaluation to capital account, to the capital account of the partners. to capital account. Now in this case it will be 2000. This is a profit because our revaluation credit total is coming more. So this is what a simple revaluation account is. There are many typical entries for which I will be posting a new video. But first of all, I'll complete, then I'll do the videos again. So this is a very typical
Okay, sir.
similar sum. I have many more
Hmm.
sums in this. There are 35 entries which I have counted. I have just done only 10. So 25 entries are more there. So which are very difficult type. But we can do it easily, and once I will do it, then it will become easier. Next class I will be doing with you the accumulated profits and losses. Okay, dear.
Sir, the
I'll.
YouTube channel
Uh,
has all the videos of yours.
yeah, I have almost prepared. I'm sending to whenever I'm doing whichever chapter I'm sending them.
No, sir. The
Sanjiv.Sirjii, whatever chapter you require, you type, you will be getting it. Like suppose cash book.
okay, sir. Hmm.
Sanjiv.Sirjii cash book. You will be getting my chapters. I have made the
Okay, sir.
this one what we say playlist. So you will be getting all the chapters of cash book. Cash book you don't have. Suppose issue of
No,
shares.
sir.
So many videos are
Yes,
there
sir.
of issue of shares like that.
Yes, sir. I know.